The CHAFTA agreement supports increased trade connections. As the Chinese population ages, there's going to be increased demand for health and aged care services, and in particular, the CHAFTA agreement allows Australian providers greater access to the Chinese market in that regard. And of course, we expect to see a pickup also in demand for financial services.
Well, first of all, the main appeal is that the Australia investment opportunity is more likely to be predictable and reliable, which is a very important environment for Chinese investment to take place within. The second thing is that it's been a bipartisan support from the Australian government to encourage the opportunity of China investment into Australia. Diversification. When you look at the China 13th five-year plan, it talks about agribusiness, it talks about education, it talks about the environment, and it talks about energy.
Prior to 2014, about 70% of investment went into mining, commodities, oil and gas, and almost 30% was into power utilities infrastructure. And that has changed since 2014 to the point where the metals and mining, oil and gas investments now down to less than 20%. So there's a real focus away from commodities to products and services where Chinese corporates can benefit.
Australia, frankly, will benefit from that investment because we purely do not have the scale to grow our industries in agriculture, environment, biotech without further investment. To get to the kind of scale where we will benefit by exporting back into China, we must first have that investment to grow here in our own domestic economy.
The CHAFTA is absolutely opening a very bright future, sort of dismantling barrier. This is the right way to do business. I look after most of the trade corridors because they mostly run through China, and China-Australia is definitely the bright spot for the group.